Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So when you look at thetas, and a lot of people understand when they're doing calendars, they're saying, oh, the front month has an extremely large volatility relative to the back month, and I want to try to get this advantage of it. But let's just pull up a simple one, and let's just stick with our IBM theme. And once again, this is what I'm talking about when you're doing options. You need to understand, yes, I might want to do this, but you have to understand the risk that's involved with this time decay. We'll look at October and January. I wish I had November's, but I can't. I don't have them. So let's look at two decent-sized options. 32 days to expiration, 123 days to expiration. The calendar would be we're going to buy the at-the-money 120. We're going to sell. We're going to buy the January 120. We're going to sell the October 120. I'm going to add that to the calculator. All right, and I'm going to reset everything so we get back to where we're at. That's what a time spread would look like. But now notice our Vega. Look at how much larger our back month Vega is relative to the front month. Well, and in terms of dollar amount, this means that if there's a 1 point decrease in volatility, this thing's going to lose $13. And let's get even crazier if we do a 10 lot on this, right? Because we're talking about position. This is going to go up tenfold, and we hit calculate. Now we're talking about $135 of risk for a 1 point movement in implied. So let's say we get a 5 point movement. I'm going to move them the exact same. Now obviously this doesn't have any skew in it or whatever, and we're assuming that vol would move the same. That's not the point here. If you've traded calendars, just understand this concept. Now let's move it down 10. If we move it down 10, you'll see our profit and loss on this position. You'll see this thing go down quite a bit at this point in time because we're looking at this blue line right here. So let's move it down 10. All right. We're going to go from 0 all the way down to negative 10. And we see we have a much larger loss in this situation because of our huge Vega. If we reset and we go back, loss is only $359. So you can see how big of a factor Vega can be, especially when you understand that back month volatility, that option contract is going to affect it much more than it necessarily will on the front month. All right, so like I said, when we first started this little presentation, I'm going to try to get you to think about the Greeks as a way to look at it and figure out how it's affecting your strategy. Where is your risk inside that strategy? A lot of people think of calendar plays as time decay plays. And yes, they are, but they're more so a time decay play as expiration approaches in the front month. If you have two longer dated options, like I showed you with the October and the January, Vega is driving that strategy much more than Theta is. All right, and I think I wonder if I got rid of that. Let's go and look at it. Right? So if I go up further in time, look at how small my Theta is relative to my Vega on this trade when we first put it on. All right. Well, I guess the last one is rho, and I already talked about that. Rho is carry costs. It's the amount of theoretical options price will change for a corresponding 1% change in interest rates. It's used in the price of the option contract. Bottom line is it deals with carry costs, it deals with dividends, that's all in there. It's going to figure that out. And if you're trading a 30-day option, rho is not going to be a big factor. If the Fed moved interest rates 1%, you'd be much more interested in what's happening in the market than what's going to happen to your 30-day option. But it does have a big effect if you're a leaps trader, especially if you like to trade at the money options, ones that have a ton of time premium in them. So that's rho. We'll just leave that as is. Let's go on. Last one here. So I want to thank the ISE for asking me to be a guest speaker. I really, really appreciate it. Would love to come back and do more. Steve Meisinger wasn't here today. He had a seminar that he had to do. I want to thank a lot for coming around. But if you have any questions, email asktheexpert@ise.com. Check out the website for more webcasts. And I appreciate the fact that everybody showed. We did have a snafu today, and our actual webcast got deleted earlier. So I'm sure a lot of people weren't able to join because of that. But a lot of events coming up. These two guys are great speakers. I know them both personally, and I've spoke with both of them personally in different seminars and different events. Jack Crooks is going to be here on 9/22. John Person's going to be here on 9/29. My name's Brian Overby. I actually have a blog called theoptionsguy.tradeking.com, and I showed that to you a little bit earlier. And I also we do webinars at TradeKing, so if you want to check out our webinars, just go to webinars.tradeking.com. Remember not to put the W's in. And the Options Playbook, I just did the second version. It just came back. I got the first copy in my briefcase right now. We should be selling it on Amazon. It's only a mere $25. We address a lot of things. This whole Greeks presentation I talked about in great detail inside the playbook. So check out my blog, check out my book. If you send me an email and you open up a TradeKing account, I will give you a code. Send me the email to theoptionsguy@tradeking.com, and I'll give you a code so that you get a free version of the new Options Playbook. All right, so if you are willing to open up a TradeKing account, I will send you a new version of the playbook just for opening it up. Just let me know that you listened to me on the ISE webcast, and we'll see what we can do from there. Now remember, you have to open an account in order to receive a playbook. I get a lot of people say, send me a playbook, and I'm like, well, okay, open up the account, and then we'll take care of you.
Thanks so much, Brian. On behalf of the ISE and everyone who was able to join us this afternoon, we really appreciate your fabulous presentation, and definitely make sure to check out Brian's blog and his new Options Playbook coming out on Amazon next week. So
thank you.
Thanks again, and definitely come back tomorrow to our archives, where we're going to post a recording of this webinar session, and it's also going to be available on podcast on fxoptions.com. So thanks, everyone, and have a nice evening. Bye.
Yep. And if you have any questions that I didn't address, feel free to email them to me, and I will try to address them over the next couple of days. Okay? Thanks a lot.
Thank you.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.